for Thank you for joining us today. For those of you that don't know me, my name is Nick Sharon-Lambus and I'm the Managing Director of Alpha Wealth. I'm delighted to say I'm joined today by Peter Smith, who's Investment Director of AVIVA Investors. Peter's kindly given up his time to provide some insight into the whole area of ESG. We will get started there very shortly, but I've just put up a poll just before we start, really just to find out how many of you know about ESG. If you don't mind, if you could just maybe give your answer. It's very simple, just a yes or no, and it'll give us a good insight into, I suppose, how aware people are of this area. Just with regards to the session today, it's going to be a 15-minute Q&A. Peter's an expert in the whole area of ESG. I'm not sure if any of you have heard, but Peter does a weekly bite size with the AVIVA investors, which are fantastic, and I would encourage you all to try and listen into them. And as I said, we were going to try and make this a kind of an informative session. There will be a Q&A. It's being manned by a colleague of mine, Keenan. So please do feel free to ask any questions, and we will look to answer them either at the end of this session, or indeed we'll get back to you in due course. And we try to make these things, I suppose, as informal as we can. So I appreciate some of you maybe listen to this on video, but for those of you that are logging in, it is being recorded, and if anyone would like to have the playback, obviously we'll happily share that with you afterwards. So just before we kind of kick off, I can see that from the results of the poll so far, there's a higher percentage of people who don't know about ESG. So I suppose from that perspective, there is a little bit of information to be gained. So I'm going to get straight into it, Peter. Just with regards to, sorry, and just before we kind of start, if you don't mind, if you could maybe turn off the cameras, if any of you do have your cameras switched on, and maybe just make sure that your mics are muted. As I said, we will have a Q&A within the chat, so please do feel free to ask any questions, and there will be an opportunity for people to ask when we go through this. So I suppose, Peter, we'll get kicked off straight away. Can you just explain maybe in simple language what exactly is ESG and what does it stand for?
That's great, Nick. Yeah, so ESG stands for environmental, social, and governance. And really, in a simple language, what that means from an investing point of view is, I kind of think of it, you know, historically when we'd look and evaluate companies from an investment standpoint, we'd look at their financial metrics, their fundamentals, things like, you know, their profit, their revenue, their growth, all of these things. And ESG basically incorporates a few other different metrics. So we look at how that company may impact the environment, how that company may impact from a social perspective, so maybe on its suppliers or on its staff, and then also the G, how it is governed, you know, what is the makeup of their board and issues around that. So from our standpoint, you know, it's really investing in companies that are building their business for a more sustainable future, and that makes sense both from an investment standpoint, but also for the greater good of mankind as well.
Very good. And can you give some specific examples of ESG companies?
Yeah, so I think a lot of the time when people think about this, they think an ESG company, it's an environmental company, something like renewables or a renewable energy company or a wind farm company. But when we look at this, we look at ESG throughout our whole investment universe. So every company that we invest in, we need to look at it from an ESG perspective. So look at those environmental, social, and governance factors. So, you know, an example of that is a company that, you know, most of our equity portfolios would hold is something like Microsoft. So Microsoft, global, huge tech company, and we evaluate that from an ESG perspective. So when we look at that, you know, from an environmental perspective, Microsoft scores very well from an environmental perspective because we hear a lot about, you know, renewable energy. Microsoft is actually using renewable energy within these data centers. So data centers are this big drain we all hear about that eat a lot of electricity, but Microsoft are doing something about that by moving to renewable energy. From a social aspect, they treat their staff very well. From a governance aspect, they have a very high level of independent directors on their board. They have 30% female membership on their board as well. So, it's not just ESG isn't just looking at these companies that we associate with the environment. It's looking at our whole investment universe and basically evaluating each company, not just from the financial point of view, but also from an ESG perspective.
And Peter, like I've been in the industry for over 20 years now, but why is it become such a big thing of late? Why is it such a big move towards it over recent months, over, the last 5 or 10 years, for example?
Yeah, well, I think when I think of this, I think of three main reasons, and to varying extents, they have a bigger or lesser impact on it. But three main reasons: client demand is obviously one, and we're seeing an increasing client demand for funds that take into account companies' ESG credentials. So that's one, client demand. Corporate responsibility. So we hear a lot about corporates, large companies bringing out sort of goals to be what we call net zero by 2050, so to basically negate their carbon emissions by 2050. But also on the corporate side, from looking at their staff within their pension schemes are looking for more sustainable investments within those. So there's a bit of corporate responsibility there. But to me, the biggest driver of all of this, why we're seeing such a big move now, is around regulation. We've seen additional regulation come into play this year around what we as an investment managers need to do to take into account ESG factors. Next year, that's going to ramp up even further. So regulation, like we've seen for the introduction of putting fines for or having to pay for plastic bags from supermarkets, or the smoking ban that came in. Regulation is a key driver of change in many ways, and the same is going to be the same factor is going to happen within ESG. Interestingly, you mentioned it's been a big move, and we're seeing this of late. Interesting stat this year when we look at all the flows within Europe. Inflows into investment funds on listed exchanges, 50% of those inflows into funds has been to ESG funds. So that's half of all inflows this year to date within Europe coming into exchange traded funds have been going towards ESG funds. So just an interesting stat around that whole play towards ESG.
That's incredible. It really is. So I suppose, Peter, talking to clients as I do, there's a little bit of a kind of a concern sometimes that by investing in these ESG companies, that their returns might suffer. Can you just give us your thoughts on that? What do you think?
Yeah, well, I mean, our primary goal as an investment manager is obviously to deliver returns to our clients. That's our primary goal. We can't really lose sight of that. I mean, we believe that investing in better run companies that treat their staff and the environment in a more sustainable way will sort of produce better outcomes, and they will outperform their peers. And we're beginning to see that. I mean, we see that when we look at funds that we have within AVIVA Investors, and some of those funds are outperforming their peers because they're investing in better scoring ESG type companies that are building a more sustainable future. And we're seeing that outperformance come to life a lot more. So from our point of view, we're not running a charity when we're looking at investing. What's important to us is providing returns for clients, and we believe ESG investing is something that will help us achieve that.
And I suppose following on from that, is it true to say then that these investments are riskier than, say, traditional investments like managed funds?
No, I really don't think so, Nick. I think, from any analysis we've done, is that, companies actually adopting strong ESG credentials or considerations actually have lower volatility or risk associated with them. I think a good example of this is there was a study done recently enough, but over a 10-year period in the US. So the top 500 companies in the US. And of those top 500 companies over a 10-year period, 17 of those companies went bankrupt. When we look at those 17 companies from an ESG perspective, 15 of them scored poorly from an ESG perspective. So, from that perspective, I think it gives a good illustration of, how important now looking at companies from an ESG perspective is. And, it relates back to the risk that you can say, when we look at risk, certainly those stronger ESG companies with stronger ESG credentials tend to have less risk associated with them.
Okay. And I suppose, Peter, when you look under the bonnet, not all ESG funds are the same. And I've read a little bit about this, but there's different types of ESG funds from a point of view of classification. So you've got like Article 6, Article 8, and Article 9. Can you just briefly explain like what is the difference between them and how do you classify them?
Yeah, so this is an interesting one. This is regulation. Using regulatory words like Article 6, 8, and 9 isn't too helpful, but I see this as it's like when you think about you go to the supermarket and you pick up a food and you see the label on it, and the label has salt, the percentage of salt it has in it, and it's green, orange, or red. This is very similar to that. So what regulation is trying to do, and this will come through over the next 12 months, is they've tried to label funds from an ESG perspective. So 6, 8, and 9 basically is that categorization. 6 is a fund that doesn't really incorporate ESG into that fund. An Article 8 fund is a fund that incorporates ESG to some extent. So it has ESG considerations built into it. And then an Article 9 fund is what I kind of see as a dark green fund, quite niche in a way. It would be something like an equity fund that invests in only renewables or climate change companies or a water fund. So what the regulators tried to do is provide some transparency to investors, and they've categorized them as 6, 8, and 9, sort of 6 being no ESG, 8 being sort of a light green, and 9 being a darker green, more niche type ESG type product.
And for an investor out there, Peter, that's maybe looking to tread their toe in the water, can you give any steer as to which of those articles are better or worse, or is there any sense of how you go about doing this?
Yeah, well, obviously, the first thing I'd say is we've done lots of research around ESG, and when ESG is explained clearly to an investor, sort of 8 out of 10 of them will likely opt for an ESG type fund. So that's the one piece that I start off with. So that's sort of when you're looking at 6, 8, and 9 funds, you're going to go towards. I think investors will look at Article 8 or Article 9 funds. Those funds that do have some sort of ESG built into them. Well, I think will happen is investors will tend to go to that middle ground, which is going to be an Article 8 fund, a light green fund that does consider ESG within it, but isn't too niche that it's too different from the mainstream. So I think the Article 8, that middle type fund, which offers some sort of ESG credentials, is going to be what we see a lot of the flows, and we've seen this in Europe as well, a lot of the flows going into that type of fund.
Okay, very good. And I suppose finally, Peter, the $64 million question, if you had, say, 100,000 euros to invest, how much of that would you allocate towards ESG?
So, I mean, it's a difficult question to answer. I think there's some points to make here. Investment choice around ESG is continuing to evolve. We're at the beginning, of a journey here. But I think as funds come online, I mean, I personally gain access to my investments through sort of multi-asset funds, and certainly I do that from an ESG perspective as well. And I think most investors will look sort of at a 70 to 80% allocation to a multi-asset fund and have a satellite option to that. And I think from my point of view, there's no reason that 80 to 100% of my portfolio shouldn't now be allocated towards some form of ESG. So that Article 8 type fund for 70 to 80% of my holding, and then that 10 or 20% towards something that's more niche. So certainly from my perspective, I think there's no reason why investors shouldn't be looking to basically expose themselves to a greater extent around ESG. One interesting fact that we've looked at, we've done a surveys recently, is when we think about greening your investments, one thing that's interesting, we have a lot of people, looking to change their cars to electric vehicles. We've done an analysis whereby, actually moving your investments to a green type of investment, to an ESG type fund, is 20 times more powerful than moving to an electric car over your lifetime. So there's other aspects here. People obviously, from a returns perspective, want to get strong returns. We think you can do that with an ESG fund, but also from the whole point about doing more for the planet. The research we've carried out is a green pension is basically 20 times more powerful or impactful than even changing your car to an electric version of it. So some really interesting things there.
Yeah, that's a really interesting statistic. And it's a good point that you make, Peter, that typically, I suppose the word on the street is that it is kind of generally quite niche. But as you say, and the more I've looked into, AVIVA's multi-asset funds, it's really pleasing to see that they are ESG, I suppose, related in that you can get both, which is fantastic. So, again, it's really good. And I think you're correct in that it's becoming more and more commonplace. I've been saying to clients over the last number of weeks and months, and you see it with the likes of, say, McDonald's with the vegan burger and so on and so forth. It's every walk of life. It's going to become more prevalent. It's kind of getting a little bit ahead of the curve. But yeah, no, it's really insightful. I really appreciate your updates, Peter. As always, they're really kind of valuable, and I hope it's definitely kind of helped people in terms of understanding a bit more about ESG and I suppose how it relates to us in terms of like our savings and our pension funds. I did say that there would be a Q&A, so I'm going to maybe invite some questions. I see that there are one or two questions in the chat. There was one question that I was asked, Peter, which I suppose I may throw at you just by someone that had asked me during the week. And it was basically from a cost perspective, what are the costs associated with accessing these funds, and are they more expensive?
Yeah, so that's a question that comes up quite a bit. It's a question that the industry has been asked quite a bit as well over the last year or two. From our perspective, I mentioned our flagship multi-asset fund in AVIVA, our multi-asset fund MAF. It is basically delivered or cost-wise, it's at standard cost. So there's no additional cost to buying or investing in that fund. I think for the more niche products, for those very dark green type products, a water fund or a renewables fund or a climate fund, you will have additional costs built into that. But certainly we don't believe for our flagship fund, where we introduced it as an ESG fund, this Article 8 type fund, we certainly haven't increased the cost as a result of that. I mean, it doesn't, from our point of view, investors shouldn't need to pay more to be doing good, and we think it's going to actually impact on more positive returns for them.
It's great. So you're saying basically investors can get access to these funds quite simply through the multi-asset range. There's different risk categories, obviously, so that they can go in at a medium, a high risk, or a lower risk level, and they don't have to pay any more for it. So yeah, it's really kind of a win-win from that perspective. I suppose I don't know if anyone else has any questions, but Peter's kindly taken the time to run through things today. And if anyone does, please do feel free to reach out to us. As I say, the video is available for anyone who may have joined late or indeed may want to just listen back. Thank you very much,